Thank you, Mr. Chairman. Jon Schnautz, Vice President of State Affairs. I'm with the National Association of Mutual Insurance Companies here neutrally today. The association I represent, as the name implies, is a property and casualty insurance association focused on mutual insurers. So to the question earlier from Representative Slauson about company types, our membership is not exclusively mutuals, but it is largely mutuals, and that's where our roots are. And to be clear, those companies are not publicly traded. That's the main distinction. In addition to what I do here in Texas, I also oversee our advocacy around the country. And the message I bring you, whether hopeful or not, is Texas is not alone. This is a national issue. Our industry is under, I would say, a lot, perhaps unprecedented pressure from a lot of directions. And the frame I really want to focus on here is losses. Because I think that informs two things. First, it helps explain what's going on in the market. If you look at auto, for example, if you look at direct written premium 10 years ago and you look at direct losses 10 years ago, both have gone up by almost exactly the same amount. And I think what that tells you is what's driving the premiums is the increase in losses. That same is generally true on homeowners. That's a little trickier because there's a lot of fluctuation year to year. Chairman, as you know, a hurricane can make a huge difference in a bad year or a good one. But the same general trend is true there. So I think, first of all, that explains what not to do. And from our perspective, what not to do is to try to change the rate regulation system. That's not where the problem lies. All the things that you can do that are solutions are going to be focused on losses. I'll suggest one that hasn't been specifically mentioned that I think you'd get a lot of agreement on. Resilience and mitigation. Several states have put state funding into trying to help make property more resilient. A lot of that is around fortified roofs. There's a group called IBHS that the insurance industry helped found and is funded. That is built around resiliency. Give money to people to make their property more resilient. Alabama, weirdly enough, started this. Kentucky's now done it. Oklahoma's done it. Maybe it's an SEC thing. Texas can do the same kind of program. Now, it costs money. It's not free, but those are the sorts of things that actually focus on losses. And Mr. Chairman, we will take your charge to look at that issue more fully. I hope to get a question on the rate review part. I think I don't think I have enough time left in the 3 minutes to get there, but I think the available evidence suggests that is not where you look to solve this problem because we still have a competitive market. It's a market under pressure, but it's still competitive. And so looking at rate regulation from our perspective is not where to look. Happy to answer any questions.
Thank you.